Good evening, good evening, good evening, and happy Thursday night. Working hard towards the weekend and getting started. Glad to have you with us. Got a really full classroom tonight with fine entrepreneurs and associates. My name's Steve Carver. It's my pleasure to welcome you to class, to work with you and for you. I'm very gratified when I see people making progress and taking the next step in their business. This is my number 1183 presentation tonight, so thank you for joining me on my journey and let me join you on your journey into entrepreneurship. I am not a lawyer or an accountant. I'm a fellow that's been in business 66 years and counting. Had a great business day today, sold some stuff, sold some implements and parts, and talked to a lot of people, and worked on a new series, two new series of webinars we're planning for the summer and the fall. So I've got a lot done today, and I hope y'all have had a good, productive day and are feeling good as well. Main thing I do is offer advice. Advice has come to me over all the years in business and from so many of my friends and fellow classmates. It's free. Take it or leave it. The best advice I can always give you is when you're making an important decision related to your business or your financial security, get a second or third opinion. If you're out here new by yourself, nobody to talk to about important business decisions, your small business centers are geared up to do exactly that. There's one of them in almost every community college, and within that small business center, there's a director who is well trained and has a great network of information and people to help you. Now, just because they are located in the community colleges doesn't mean they're for college students. That's just where they're located. The small business centers are out there to serve you, entrepreneurs getting your business started or growing it or buying it or selling it, whatever is related to small business, they're there to help you in a confidential way. And the good news is no charge. It's free just to help you get moving. We're sponsored tonight by the center at James Brunt Community College in Kenansville. The Small Business Center is actually over in Warsaw, and Joey Wynn there is our director. Absolutely one of the very best in the business, and she's just sitting there hoping to hear from you to help you with your business. She's very energetic to do anything she can to help you move forward. So if you can't see the screen, let me tell you her phone number if you want to write it down. It's 910-659-6008. And tomorrow when you get your video, of course you can stop the video anytime you want to and take screenshots or write information down. So give Joy a call, let her help you. If you have any interest in the commercial kitchen type business, like you're going to start a food truck or something along that nature, pop up serving food. One of the very best commercial kitchens in the entire state is there at that small business center, and Lynn Murphy runs that, and she's just a wealth of information to things related to food prep and commercial kitchens and things such as that. If you visit over there, you're liable to see Kayla. She's there as well, Kayla Delsid. She does clerical work and will help you any way she can as well. Thank you all for great attendance through these 7 lessons. I'm just very happy for you and that we've been able to get to know each other and share things as much as we have. We've run this series of lessons on Thursday nights with a lunch and learn at noon on Tuesdays. So we've got a lot of people that has been joining and a lot of people that are very busy. But in these Thursday night sessions, as you can see on the screen, we got some folks that have really knocked it out of the ballpark with good continuous attendance. And I give a special thank you to Sonia Roberts, who has attended through tonight, every session on Tuesday and on Thursday night. So she's gonna get 2 sets of certificates for her situation. And several of you have missed a class on Thursday nights, but made it up on Tuesday. So that's a good thing too. That's what those white X's represent. So y'all be getting lots of certificates here after the nice presentations, and I'll announce who gets what later on, probably in the email or in my first class that I give after this. So I am keeping up with your attendance. If you want to make it up some other way, or you want to send in some of your assignments, any request will certainly be welcome. I love to send out their certificates and encourages people to come back and join the academy and attend more classes as we go along and increase our learning. If you had signed up early, then hopefully you've got some handouts that were emailed to you. The main one being the one that starts out with 1182. That's an outline of tonight's class, plus several more. And one of the study guides or handouts that are sent to you is the quiz for this series. That kind of summarizes the things that we've talked about, gives you an opportunity to write down your answers and send them back to me. When you do send it back, make sure you fill in the top of it up there with your name and complete mailing address. That way, if you're qualifying for a certificate, we'll know how to fill it out and where to send it to. So if you did not get any email about tonight's class, just write over in chat. Please send me the study guides, and I'll make sure I send you all the study guides related to tonight. Excuse my voice is coming about. So exciting that I got a couple of weeks break. I got me a little bit 2-week vacation here, but on April 23rd, I hope you'll rejoin us. We're doing something brand new with the center there at James Front. We're going to do a brand new series, and I'm calling it an advanced academy course because we're digging in deeper, more than just basic core topics. We're going to talk about the fine points about how to stay in business for the long haul, the little things that, the little things that you can do to look towards thriving in business, which is a lot more than just surviving. The things that we can do to keep our business alive for a long time. The director there who asked me to put these two presentations together said, Steve, if you've been in business for 66 years and counting and sold several businesses and they're still operating, then I want you to tell us how you do it. So that's what I've been working real hard on, and looking forward to presenting and sharing with you information that I know will help you, and I hope you will consider coming back to see me, and we'll spend some more time together. Let me brag on you. These folks are just doing a fantastic job. Sarita Sampson's been with us all along. She's qualifying for another certificate. Sarita is a Master's 12 associate. That means she has been to 14 different series and stayed with it, and she is a great lady and does a great job for us and for everybody. Christina Lee has been with us several times. She's over in Jacksonville, and she hasn't been able to join us often, but Christina is a fantastic promoter of costume jewelry. So I wanted to mention to you that if you'll find her at Bling with Shaquille, down at the bottom of the screen there, Bling with Shaquille, Christine is doing a fantastic job of marketing, and I've learned a lot just by watching her marketing. She does videos and great images. Be a good place to learn for any of you that are knowing that you're going to be marketing your wares on Facebook. Let me recommend Christina's Facebook site. Tisha's been with us for a lot of years. She's a master's associate, and she has her business in Magnolia. Hope has been with us many times and doing a great job getting her little business started up. She's selling items on Facebook and calling it Hope's Hunt. So thank you, Hope. It's been a pleasure to work with you. Desiree has come to America from Dubai and has businesses in several other countries, and she's here now setting up a counseling businesses in the Raleigh-Durham area. So happy to have had a chance to work with you, Desiree, and look forward to seeing your business grow and go, and thank you for being a part of this series. Kenyatta lives in Clinton, but she's spending time in Oklahoma now, learning how to put her gummies business together, how to make it, package it, and market it. So thank you, Kenyatta, for being with us. And Dr. Carolyn Jacobs in Mebane, a hardworking lady, worked several places in the country. She's with us tonight. So proud to have you with us, Dr. Jacobs. And her mission and vision statement just kind of told it all to me, but she wants to become a champion for children with special needs, and I can't think of a more worthy goal than that. So thank you, Carolyn. Stephanie with us tonight. She's riding and driving and getting her new business up and running on a continuing basis. Thank you for working with us, Stephanie, and I look forward to helping you any way we can. Lynette Barber is in Raleigh. She is a singer, a jazz singer, a performer, and she has been working with us getting her business up and running. She did her business plan, did her menu of ways she's going to make money and putting that together. So looking forward to seeing that business grow as well. LaShiva Dunlap is a fantastic, wonderful, great-spirited young lady. Gave us a great mission vision statement. She's going to do all different sorts of ways of making money as a notary public. So proud of her. We got great videos at her Facebook site. I encourage y'all to visit with her there. But again, we can follow her lead on her mission, vision, and promise statements. I'd like each one of you to give serious consideration to moving forward. That sort of really help you. LaShiva, I see you're with us tonight. Welcome, and thank you so much for your hard work, and I hope it pays off for you. And now a special, Laura is with us tonight. She's been attending the noon classes, but Laura Eason at Snow Hill is with us tonight, and she's working hard, and she's going to be sending stuff related to her business getting started when she's ready. But it's been a loyal thing. She's been just learning, but all of us now get to say happy birthday to Laura. I think she celebrated her birthday yesterday, so let's all give her a hand. And these birthdays are good to get, right, everybody? So, Laura, thank you for joining us tonight. We're certainly proud of you and your work. I want to tell you, I enjoy looking at your Facebook presentations. I can tell that you're just a real family person, love your family, and they love you. And the numbers just keep multiplying with your contacts and your good work through your church and in the community. No better way to promote a small business than to be out there in the community doing things for people like that. So here we go. Let's see what else we can do. Join us if you would. Go to the Academy, the Entrepreneurs and Associates Facebook page. Check it out. Check it out now, and then check it out this time next week, because finally I'm going to have time to update the page with some of your pictures that you've just seen from this class and the one we just finished before this one. Get some fresh faces and information where we can start helping to promote your business at Entrepreneurs and Associates. But y'all need to be there. Like it, be a part of it, and start tracking it. This is one way that we can share each other's businesses. And if you've got 500 people and I got 1,000 people, and we share it, then by golly, we can really do a lot of good for a lot of people just through the Academy here. The Academy is all about our devotion to mutual helpfulness, and that's what we all do. We've been doing a quote each week, so let's wrap it up this time with the 7 quotes. Walt Disney told us to get started and stop talking, and let's get something done. Michael Ventura said there ain't no finish line, it's just mile markers. Just keep taking it 1 mile mark at a time, and you'll eventually get to where you want to go. Bill Gates said we'll learn more from our unhappy customers than we do from our happy customers, and he's so right. Because if you can take a negative situation with a customer and work through it, turn it around and turn it into a positive situation, you'll have a raving fan customer for the rest of your business life. Nelson hit the nail on the head when he said, one of the very best ways to keep customers coming back is to always give them a little bit more than they expect. Give them a little bit more, not a little bit less, because most people in today's business world are expecting to get a little bit less than what they really like. So we need to strive to give them a little more. And that doesn't mean give them more money or bigger discounts. So, of course, that's always appreciated. But a little bit more attention, a little bit more of yourself, a little bit more of give and take, a little bit more to make them feel important. That's what they'd like. And that way, when they hang up the phone or they have time to reflect on their relationship with you, it's a positive relationship that they look forward to doing again, and therefore continuous business is there for you. Mark Zuckerberg said, the biggest risk you'll take is not taking any risk at all. Very true. That's very true. To get in the game means that you're going to have to start taking some risk. And Jenny said, people don't really care how much you know until they know how much you care and how much you will share. Are you willing to share? Because that's going to be the mark of a giver instead of a taker. Are you willing to share with your employees, with your customers, and with your community? And wrapping it up, Wayne said, some people dream about success. I've done that. While other people just get up every morning and go make it happen. And that's kind of what we got to do is to find the endurance to stay in the game, to go make it happen. So let's kind of get started with that. So if you don't mind, get your happy fingers going here. We're going to do a little bit of chat talk. I'd like for all of you to participate that can. That has you have a place to do that. Writing these things down to help you remember for sure. Back in lesson number 1, 7 weeks ago, we said that the best way to catch fish, remember, the best way to catch fish in the ocean was to keep fresh bait in the water. That was rule number 1. Rule number 2, keep fresh bait in the water. And rule number 3 was keep fresh bait in the water. But we're after customers. We want to keep catching customers. So to catch customers, we need to keep doing something. We need to keep out sending fresh what? Fresh, the word starts with P. We need to keep sending out fresh what? Type it in if you know that word. Fresh promotions. Type that in. Fresh promotions is what we need to send it out. And we need to send it out to our entire database. We need a database of email addresses and cell phone numbers so that we can send these fresh promotions out to everyone on your database. So please type in promotions to database. Promotions to database. So this question number 1, it ought to indicate to you that I really want you to have a database, email addresses, and the structured plan to send out fresh promotions to your customers. That's what it's going to take, one of the ingredients to keep you going. We talked about the bookkeepers last week, bookkeeping, what they do, what they don't do. We said that the accountants look at the long-term picture, but the bookkeeper focuses on what? The bookkeeper focuses on the D's and the M's, the dailies and the monthlies. That's what the bookkeeper focuses on, the daily and the monthly reports. Filling in the blanks. All of you do this one if you don't mind. Filling in the blanks. It is so important. I said in week 1, 2, and 3 that it's important to have more than one profit center, be doing more than one thing. And I encourage you to have at least 5 things to have. So that's blank number 1. I told you to answer first. Have at least 5 profit centers. And then we want to have products that we're selling and services that we're offering that people W and people N. What is the words W and N recognizing there? Desiree, you're exactly right. That's right. We need a mixture of things that people want and things that people need. I was in preparation for my next series. I was working on it today, and I counted up the number of profit centers that we've been able to put together in my little business, carverequipment.com, which I sold recently, so it's not my little business. We have 27 marketable profit centers at our business. I didn't realize it was that many, but that's probably why we're still here after 66 years. One of the big reasons, because each one of those 27 could be something that somebody wants or needs. So it's a good mix, and having that diversified mix is so important for you. Now, SEO, search engine optimization, is that skill set that we can use by putting content into our web pages. And the whole purpose for SEO is to do what? When we want to find customers, what's the best way to find customers? Is to fill in the blanks here. What do we want to do for those customers? Help them find you. Help them find you. That's what SEO is all about, and that's what we need to do to find customers. The bookkeeper has a tool belt. If you're keeping your own books or yours is doing this, the main tool belt that a bookkeeper has is a chart of accounts. That is the different ways that you make money and the different ways that you spend money. Guess what? Full circle back to budgeting and business plan. So think in terms of, as you're doing your business models for your business plan and your income models and your expense models, go ahead and name them and go ahead and put a number on them, and those numbers will go right over into your chart of accounts to help you set up your bookkeeping system. That's how it all comes together. Endurance, endurance, endurance. That's finding the guts to stay in the game. My friend, that is the key. Stay in it long enough to learn the fine points to help you stay in business. I love you, and I'm encouraging you to do that. Pay attention to it, and when you can, you implement it. Let's move on to what we're talking about today. We're going to start out talking about record keeping, then we'll move into some other subjects. All right, we're getting started in business, and this is about as boring a subject as I could bring up, so I don't talk fast and loud and tell you what you need to know. First of all, there's going to be a lot of paperwork. If you looked around my office here, if I could show you the camera around, there's filing cabinet after filing cabinet, cracked full of stuff, papers. Computers didn't do away with paperwork, did it? No. So there's going to be a lot to save, and we're going to have to save it because taxes, customer demands, and just good housekeeping, we have to do it. And there's some records you're going to need to keep. The easiest way to keep records on your computer is to save it, of course. Number two, have little flash drives that you can take stuff out of it and save it. Number three, you can use off-site software. You can use the cloud. There's a lot of ways to save your work. The main thing to remember is it needs to be saved. That's the big picture. The little picture, looking at the little tree, is start learning and be in habit of, as you're working, if you're just getting into working on computers and doing this record keeping and such as that, learn to hit that save button on your files every few minutes. Save your work as you go along. When I was first getting into this, it was so frustrating to work 30 minutes or an hour on a document or an image, then have a power failure or get distracted or just accidentally hit the wrong button on the keyboard. And I'm good at that with these dumb fingers. And my work would be gone and I couldn't get it back. So the way you fight that is you just get in the habit of saving your work as you're working. You won't be sitting here doing it. And I'll tell you right now as well that getting your business up and running, it's hard and almost impossible to run your business on a telephone. And a lot of you try to do it. I know that. But go ahead, even if you buy something used, I really encourage you to get a desktop computer and 2 monitors. You can get 4 times as much work done with 2 monitors as you can 1. And they're very inexpensive. So as you're going forward, just plan to go first class with your record keeping and get caught up with imaging and MS Word and PowerPoint and all the other myriad of different softwares that can make you be so much more productive in a short period of time. It all boils down to how much time you have to work on your business. But in your record keeping, keep your records in a safe place. Know that fire and damages can mess you up. The safety deposit box for some records that you keep permanently are important. Sometimes that's the safest place you can put it. A safety deposit box at the bank costs you $70, maybe $50 to $70 a year, depending on the bank, and that'd be for a box that's 12 inches wide, 18 inches deep, about 12 inches deep. You can put a lot of stuff in a box like that. So if you don't have a place at home that's safe, secure, and you got records that you want to take no chances with, that's the best way to take no chances. We see on television all the time on these adventure movies where the safety deposit boxes are getting busted up by professional hoods, but I hadn't heard of that happening in around eastern North Carolina since I've been here, and that's a long time. Some of these records we don't need to keep forever, permanent. That means they're here, we're stuck with them. Your articles of incorporation, your LLC agreements, accounting audit reports, stock and bond registers, deeds and mortgages, titles to your vehicles. You don't need to keep them in a safe place forever. There is no boxing them up. You have to be able to get to them. Depreciation schedules, I'll just tell you a little while why that's important. Year-end trial balances, tax returns and documents, registrations that you get from the government. There's going to be some permanent records, so just go ahead in your mind and say, okay, I'm going to keep my permanent records where? And I suggest that you have a particular filing cabinet or filing drawer that you're going to keep those in and label it. And if they're really sensitive and really you're worried about somebody messing with them or stealing them or seeing them, then get you a safety deposit box. That takes care of the permanent stuff. Now, there's items out of the myriad of different paperwork that you're going to have. There's some items that the government says you have to keep for 7 years. For 7 years. So you're going to have a set of boxes somewhere that'll be hanging around for 7 years. And I encourage you to box up and seal up and put in a safe place. Take them out of the filing cabinet drawers. Go ahead and make room for the stuff that's coming in this year. And the government says 7 years, but I don't say 8 years. The reason I say 8, because every year, forever, since we boxed up our stuff at the end of each year, waited several months before I boxed it up, still items that come in or float up to the top of the pile that should have gone into a box. And I'm not going to unbox or untape stuff. So I put that stuff in a folder, put it in my current year's box, and keep it on. So I'll have stuff every year in one box that should have gone in the box before it. So if that's something you'll probably deal with too, then keep your stuff for 8 years. But what do you keep? What do you have to keep? Things like your accounts, your bank statements, your stubs, your checks, personnel records, bills of lading. I want to take a minute and stop at that. Most of you probably don't know the term bills of lading. What that is a shipping receipt. In the trucking world, they call it a bill of lading. In the rest of the world, they just call it a shipping receipt. But the official name, bill of lading. So here's the tip. In today's world, hopefully, you're going to be selling stuff out of state. And depending on what it is and which state it's going to, probably you won't have to charge tax on it if it's going out of state. But if you should have an audit, the North Carolina DOT auditor is going to look at that invoice and say, why didn't you charge tax on this invoice? And you say, well, it went out of state. And they're going to look up at you and say, prove it. And the way you prove it is with a bill of lading or a shipping receipt. So get in the habit right now, if you're going out of state, on your invoices, you write down the information to how it was shipped and such as that. And then if you've got a statement or any way to prove it, just staple it to that invoice as you're putting your records up. But remember, that's a really important issue that you do. Sales tax returns need to be saved for 7 years, invoices, payroll records, and all of your canceled checks do. Now, this is where I'll make a recommendation for you because the timing is perfect. We know that with all the disasters and floods and tornadoes and hurricanes that we are apt to have in North Carolina, wildfires, that FEMA, the Federal Emergency Management Association, may be coming to your community after a disaster. I pray not, but if they do, you need to know that before you're going to get any help, relief on lost income as a small business owner, and sometimes that becomes available, or a low interest loan, you're going to have to provide your paperwork, your financial records, your tax returns to show the FEMA people. So remember that when you're putting this stuff in storage and putting it up, especially your last 2 years items, put it where you can get to it. Make sure it's in a safe place. Remember that I may have to pull this down in a disaster time, so have that in the back of your mind and store it somewhere where you'll be able to get to it and where it will stay dry and where the wind won't blow it away. Okay? Because these records, you'll have to claim them in case FEMA comes around. We're going to talk a lot about depreciation and deductions tonight. most new entrepreneurs hadn't had a chance to get into business do not appreciate what depreciation can do for you. So I'm going to spend some time on that with you tonight. So just look forward to that. I look for a long way to explain depreciation in realistic terms that folks can understand it. Folks like me, anyway. Because you can go to college or any one of a million probably business schools, and they'll have classes on depreciation that go for years and never cover everything. You know why? Because it's always changing. But I was able to find an article on the internet by Lisa Borga, and I've sent you a handout on it. It's really good, real easy to read, and it's full of information that'll pay a dividend for you. I'm not asking you to waste your time to read something, because after we go through this little section in the presentation tonight, you'll see why depreciation is important. And if your business is one that's going to have you buying assets, expensive assets like vehicles, equipment, or real estate, you're going to be putting a lot of cash into the assets, then depreciation is going to be real meaningful for you. And if that's the case, then you definitely want to take the time to read what Lisa has to say. It was very helpful for me. For all the rest of us average folks out here, what I'm going to tell you about depreciation right now, probably all you need to know right now until you move forward into actually doing some things yourself. So what is depreciation? We all know that when we buy something and use it, it's not worth as much tomorrow as it is today because it's used and torn up or wore down or whatever it is. Anyway, the value goes down in most things. Now, there are exceptions, of course, like in antiques and jewelry and books, and they're always changing. Old hot rod cars, 66 Chevrolets and GTOs and 442s is kind of my thing, that if I had money to invest in something old, that's probably what it would be, because I used to, that's just in my youthful days that I love. And I'm sure you've got some things that depreciation might not get in your way before you bought it. But now we're talking business. Let's get out of that personal issue. When you buy something, the value's going to go down. So it's a reduction of value with the passing of time and wear and tear. That's what the depreciation is all about. You buy equipment, it's not worth as much tomorrow as it is today. But when you buy equipment, you bought it with your company money. That's why we're talking about it. It is a representation of your investment. And so we need to see how depreciation might affect it. Let's use an example. Let's say old Kendall here. Kendall's got a $10,000 in the bank right now. Congratulations, Kendall. Glad you got that money. And by golly, his business is up and running. And today, his book value of his business is $10,000 because cash money is an asset. Okay, way to go. But Kendall will need to get started now. It's time to get in the game. And in his particular business, he needs to buy a saw, an industrial saw for woodworking. Lasheba might need to buy something else. She might need to buy a special printing machine to do specialized printing. And Priscilla might need to buy, who knows, a pressure washer or something special like that. And by God, Dr. Carolyn might need a tractor. Who knows? Anyways, we need to spend some money on something that's going to last a long time to make our business go forward. So Kendall's going to spend $5,000 on this saw. The question is, when he spends that money on that saw and he gives up that $5,000 cash, does that mean that the value of his business is cut in half by spending that money? The answer is heck no, because now he's got not only the $5,000, but he's got a brand new saw worth $5,000. So his book value is still $10,000 because the saw value counts towards the value of the business. That's the point. The new equipment he bought, the asset that he added, is now part of the book value of the business. Now his business is still worth $10,000 today, but tomorrow, no. Tomorrow that saw value is going to start going down and his book value is going to start going down. So we got to keep a record of that, because the government and the county want to know how much the business is worth, and you want to know what the book value of your business is. So The government tells us that we can depreciate assets off of our books in a cycle, and they'll give you different term limits, how fast or slow that you can depreciate different things, and it changes from year to year. It changes from year to year. It might be you can write it all off this year, or you can write it off over 5 years or 10 years, or maybe a menu of different write-offs. Different write-offs, I've started using that word, is you can depreciate it. Some people would say you can write it off. But that gets a little complicated, because some items you can write off right now and don't worry about depreciation. Some items you can write off right now and depreciation is not a factor. But other items, you write them off over a long period of time through the depreciation method. Okay? 2 ways to do it. So if we chose the write-off schedule for this saw at $5,000, we chose to put it on our books with a 5-year depreciation schedule. That would mean that each year it would decrease in value $1,000. And at the sixth year, at the end of this period of time, it wouldn't be worth a penny on our books. That's right. Each year we would take it down on value on your depreciation schedule. When you do a financial statement as a business owner, part of your financial statement is going to be a depreciation page. And that page is going to list by item all the assets that you have in your business. Your assets are listed on the depreciation page with a value, and the change in values are shown there. So that's where we're at now. How about that? Now, I said that at the end of 6 years, the book value on that saw, that Kindle ball, is going to be 0. But the saw's still in pretty darn good shape, and he's taking good care of it. He's rebuilt it, put new blades on it, new belts. I mean, he's kept it in perfect shape. And actually, the market value, remember this term we've talked about? The fair market value of this saw is still $4,000. But it's on the books at 0. First time I'm going to say it, and I'll say it several times because I want this to sink in. Book value and fair market value, looking at the same item, may be totally different. The values may be totally different. And therefore, you as a brand new entrepreneur and business owner need to know that my book value is important to me, but my fair market value is more important. Okay? The book value is for those folks who count the beans. The tax people, the bookkeepers, the accountants. They're for the bean counters. And we have to appease them with book values. Fair market value is for those folks that are out here buying and selling. And remember, we're always going to try to buy things below fair market value so we can sell them above fair market value. So let's talk about depreciation now. The government wants to encourage you and me to buy stuff, especially American-made manufactured items. And on some items, they'll give you a better depreciation plan than they do on others. But on all items, if it's an asset, you get a break on it, and they encourage people to build their businesses. So they offer you a tax incentive, a tax break, a way of paying less tax by using your depreciation on your assets. So remember, we were depreciating that saw $1,000 a year. Guess what? Each year through that saw, we're able to lower our tax exposure. We can deduct that $1,000 from our amount of tax exposure we have, so we don't have to pay as much taxes. Yeah, all 5 years. So when you purchase that $5,000 item, you know it was going to go down in value. But the good news is, as it goes down in value, you're going to get a tax break. That is a big deal for lots of folks. People that are in the rental industry, in the real estate industry, people that handle a lot of big ticket items, that buy and sell it, use it and such as that. Sometimes they make more money on the depreciation than they do on any other part of their business. And that usually means they got a pretty good business. So if that's something you're looking at, you need to be very much aware of this. Now, I said there were some items that we depreciate right off right now, and some we use through the depreciation. The items that we're going to depreciate right away, we're going to call those just general business expenses write-offs. Things that we use up, things that are not tangible, things that don't last a year, usable stuff. The items that's going to hang around a while, and we spent some pretty big money on, and we want to use that investment to show that our business has a net worth of more than zero. We want to use that item because it's impressive. We use it. We help make money on it. We might use it for collateral. Those items we're going to call capital items. I don't know where it came from, but the accountants say we're going to capitalize this item. That means we're going to depreciate it. Okay? So let's talk about some of the differences there and how that might affect you. We'll come back to that. Taxes now, because this is going to play in here. When I talk to a CPA, accountant, experienced bookkeepers, I usually ask them, what is the first thing I need to remind my fellow entrepreneurs and associates in class about related to bookkeeping and paying taxes and such as that? And they will always tell me to encourage you, the new entrepreneur, that as you start taking in tax money, as you start selling stuff and collecting tax for the state, you need to have in the back of your mind from day one, and anybody that works for you, that tax money is not yours. Yeah, you took it in, you collected it, but it belongs to the state. The very minute it passed in your hands, it belonged to the state. The state's giving you a franchise to collect money for them. You know what? They used to pay you a kickback on the taxes you collected. No more, though. That's all down the drain. But now you're going to start collecting some tax money as you start selling things. The very minute that money comes into your account, as we talked about last week in bookkeeping, it needs to be set aside. Pigeonholed, I like to call it. Old term we've used around my family. We don't pigeonhole that money, which means I'm going to put it in a place nobody else knows where it is. It's not going to be touched until I need it. Do that, please. Do that, please. Pigeonhole tax money so it'll be there when you have to pay it. The accountants and bookkeepers tell me that gets more people in trouble with new businesses than anything else. They've had a great year, a great month, a great whatever, took in a lot of tax money, but when it came time to pay it, for some reason they had spent it somewhere else. Paying bills, paying down loans or debts, going on a cruise, who knows what it was. At any rate, the money's not there because they didn't pigeonhole it. So I'm nailing this down with you, my friends. Pigeonhole that money. If you're going to have employees, if you're going to pay yourself a salary and taking out Social Security, benefits, workman's comp, all that stuff, when you write yourself a check or when you write that employee a check, you need to be writing a check to that tax account too, because those deductions have to be sent in. We got to remember that just because we're making payroll doesn't mean we're shelling out the right amount of money. Like if you've got a $4,000 payroll in your business, then you've probably got a $6,500 amount of money that needs to go aside. That's part of that cost of doing business. Yeah, and it has to be accounted for, and that money needs to be set aside. It's a lot better to set aside than it is to wait till the end of the month or the week it has to be paid. No, you don't have it and have to go into a panic trying to find it. So keep that in mind always. Pigeonhole the tax money. Let that sink in, okay? Business expenses, back to the subject. General write-offs, general deductions. You see how those words are all basically the same: deduction, write-off, general, business expenses, all in the same bucket, whatever you call it. But examples: rent, intangible, you pay it, it's gone, it's a write-off. Travel expenses, it's gone, it's a write-off. Paying your payroll, it's gone, it's a write-off. All those are deductible 100% from your operating expenses and lowering your taxable income. So all these items that are automatics give me a chance to say to you, if you're new in business and just getting started, your expenses are probably going to get up there real close and maybe even exceed your income. And therefore, the chances of you having to pay many taxes are very, very slim. That's the good news. But by using depreciation, it may mean that you're still looking good and you've got some money left in the bank. The capital expenses, on the other hand, can get complicated. One at the top of the list, if it's tangible, if it's a big ticket item that'll last over a year, you're probably going to write it out. You're probably going to capitalize it and call it a capital expense and depreciate it, because it's usually the good move to make. Those have to be kept up with, but sometimes if it's a real big ticket item like real estate or an expensive vehicle, where not only did you buy it, but you had to borrow money and pay interest on it, then that interest becomes a part of the bookkeeping accounting system called amortization. Depletions and depreciation gets complicated, and that goes right straight to the experienced bookkeeper and or to your accountant. They're going to handle that for you. So just know that if you're buying an expensive asset that you're borrowing money on, it's going to take a long time to depreciate it out. You probably don't need professional help to get it into your bookkeeping system. Examples, a $250 printer like I've got sitting right here, my little HP 4350, and that cost me about $250. It's going to look like it's going to last me 10 years. I'm going to depreciate that. I need everything I can in my little business to show value. So I'll depreciate that. But a big insurance company that's got 250 employees out there in the world, all of them have their own little printer. They never capitalize that. They just write it off. The message here is that every business owner can categorize these different items as to how much and when are they going to depreciate it. Okay? Total flexibility. One person do it one way, one person do it another way. Okay. This is called tax avoidance. It's a good thing to plan your tax ahead of time as much as you can, and depreciation is one of the main ways that we can have fun and be totally legal and avoid paying taxes we don't have to. A $2,500 printer, that's a pretty big ticket item. Most people definitely would depreciate that. You got a serial number, you got a date, you can prove you purchased it. It's going to sit there and run for you 15 years or more. Yeah, let's get some tax advantage. But when we ordered the printer, we ordered some paper to go along with it. Whole cases of paper? Nope. Papers are throwaway items. We're not going to depreciate that. That part of the purchase would be written off the same year. Set of tires for the truck. My business, I'd probably depreciate a $2,000 set because it lasts me for 5 years or more. On a truck that I didn't hardly use, but I had to keep good tires on it. Other big trucking companies, bus company, nah, they'd write that off. $17,000 brand new engine, oh yeah, I'd write that off. Big trucking or bus company, probably not. They just go for it. Yeah, I would depreciate it, the $17,000 item. Rent on the forklift truck? Nope, you cannot depreciate rentals. Payroll? Nope, write off. Professional fees? Write off. Set of shop tools, $4,000? Let's take a break there. Not many folks are going to buy a set of tools at one time costing $4,000 or more. Sometimes maybe, but almost never. Most time we as business people would buy $300 here and $200 there, $50 over there through the course of the year. Well, at the end of the year, you take these little bills that you paid to build up a set of tools, you add all them up, come up with a total, and call it a $4,000 set of tools and list it onto your books and depreciate it. I mean, you can keep that in a box. You can show it to the auditor, and you can keep up with the records. That's a good way to get a little tax break by combining certain items that you summarize, okay? Now, I was in the forklift business for 25, 30 years, had many hundreds of rental forklifts in my rental fleet. A lot of them were out to my customers on rent-to-own plans. Tax avoidance for my customers. They were able to write that rental off and still have a purchase option at the end of the period so they could end up with a forklift. So they were paying $1,000 a month rent. Is that a deductible item? No. It's a direct write-off. How about the delivery cost of that forklift? No delivery cost write-offs. But after 2 years paying $1,000 a month, my customer would have spent $24,000 on that forklift. Some would say they had invested $24,000, but that's not right. They had invested a penny for the ownership of that lift. They had invested operating money, write-off money, for the use of the machine. Right. So they were getting 100% write-off. They were getting 100% of that rental on that forklift was reducing their tax exposure. So they got a break there. Now, I was able, since I owned it, I was depreciating it all the time with a great big smile on my face. They were making the monthly payments for me, and I was getting the depreciation. But now, in that plan, they can have the option to buy it after 24 months. They can buy it for $5,000. And when they write us that check for $5,000, is that a general business expense? No. They're making a purchase with the $5,000, so it would be a depreciated item for $5,000. That's right. And remember we talked about earlier about the forklift? It would go on the books at a $5,000 book value, even though it would be worth maybe $20,000 fair market value. Keep that in your mind because it can really play big stuff for you. Now, y'all, new people getting started in business, mainly if you don't have a storefront, you're going to be talking about buying furniture and fixtures. You're not talking about buying telephone systems, filing cabinets, maybe a point-of-sale equipment. Those kind of items I've just mentioned will be assets. They're going to last you a year and much longer, hopefully. So those are items that you would probably want to capitalize, that you'll want to list into your business as an asset and start depreciating it for several reasons. One, it'll give you some tax advantages, but two, it will start showing value for your new business. Your book value for your business will be important. The book value is also important to the lender. So when you are showing the lender your financial statement, it's good if you are able to show some net worth in your business, okay? It's the tax season's right here. It's April 10th, and tax day is April 15th. So let's just kind of get into talking taxes a little bit. You're getting started now, so see if you can find an experienced bookkeeper, mature, experienced bookkeeper that's got some knowledge about businesses like you're starting. That will be quite helpful. Finding an experienced CPA. CPAs don't get their license until they have at least, I think it's 5 to 7 years experience in the field. So generally they've got some time in the seat to help them know what's going on. But if you're fortunate enough to have a CPA in your area that's affordable and is serving other customers in the same business that you're in, you spend some extra time talking with them and give them consideration. Everything's got a learning curve to it, and they have them just like we do. Talking about the CPAs and the bookkeepers and such as that. I've heard through the years teaching these classes, someone say, well, so-and-so told me to go talk to my CPA before I made this business decision. And I'm not saying that's a bad advice to give. Matter of fact, I've given it many times. But I will give you this little piece of advice. The bookkeepers and the CPAs are great people. I love them in church, love to sit beside them. Indeed, they help me a lot from time to time. But they are not salesmen. They are not small business owners. They're bean counters. They're trained to count beans, count money, see how it configures with the different bookkeeping and accounting systems and taxes issues. They don't tell you what's selling and what's not selling or how to do marketing. So when you're going out to find advice on helping you run your business, it's not always the CPA, the accountant, the bookkeeper that you need to be talking to. Let me tell you, more times than not, is find someone that's a good business person that's been in the business you're in, the small business center people, someone that knows real business. Book smart, bean counting smart is important, but street smart and experience is more important. You just try to remember that. Don't go running off to an accountant to get advice on something related to making sales. And that may be the best thing that you can always do is get experienced counsel, coaching, and advice from someone that's been there and done that and lived through several business cycles. America today is going through a cycle that we haven't seen since the Great Depression. Since the Great Depression. We've got things happening with these trade tariffs and trade wars, and our trading partners all across the world arguing with us, and vendors and supply chain issues and shipping issues. It's a turbulent time now in business, especially in big business on Wall Street. People are losing and making millions and billions an hour up there. Is that all above us? Yeah, sure is. Thank the Lord it is. Let's us just focus on what's going on in our business. Know that all that may rain down on us, and have in mind how it might happen. Talk to someone to say, well, what are the risk management tools I can take in these times to help me in my particular business? That is a very reasonable question. If I had the opportunity to start giving a bunch of brand new webinars tomorrow, that would be one of the topics. What can I do in my business, my type of business, for risk management in times like this where the tariffs are playing a big role? And it is affecting my business big time. So stay on top of the game, but the answers are not always with the bookkeepers and the accountants. Just know that when it comes to running your business, managing it, and making sales, that's not it. Avoidance, evasion. Avoidance, evasion, no. That's just the way it is. Avoidance is legal, and you need to do it to avoid paying taxes. Otherwise, you just use all your money up. The government has ways to get all your money. You have to know the ways to build fences and stay legal. Evasion is illegal. That's lying, cheating, misrepresenting, doing things wrong, sneaky, dirty. If they catch you, they're going to slap you hard. There is no easy going with tax evasion. Just know that. Keep it straight. Hot buttons. What are the hot buttons for entrepreneurs now? What are people asking me most about in tax season? What's going on? And the big question is, well, what can I deduct? What are my deductions now? Now you know that there's two kinds of deductions, right? What are the two kinds of deductions? The general operating business expenses, the general write-offs, no questions asked. They're those kind of deductions, and that's what's on the screen. The other deductions are depreciation items. Okay, we're going to talk now about the general expense type items. What is the no questions asked deductions that you'll be able to take? The number one thing that usually comes up with my fellow entrepreneurs in these classes is, well, what kind of break can I get with my home office deduction, Steve? Well, it's significant. Can make a big difference. Matter of fact, as you're first getting started, let me tell you, you don't have to be incorporated to get started in business, that you can have a business that you're operating as a sole proprietor and take deductions right off your regular 1040. There's an extra form you would add to it for your small business. But here it is. Home deductions based on the percentage of space that you're using in your home to run your business. Your deduction is based on the space that you're taking up in your home to run your business. And you may have to qualify that. So you don't want to start expanding it and enlarging things that just don't exist. Example, you've got a 1,000 square foot apartment. Congratulations. And in that apartment, you've got a 10-foot by 10-foot space that you're using for your desk, telephone, printer, filing cabinets, your office space. 10 by 10. you're using up 10% of your home for business. Now let's say you got a petition up, a barrier, and you got the 10 by 10 for your furniture and fixtures related to your running your office. And then you got a petition there with a desk, a table, some chairs for interviewing and entertaining customers privately. Not out here with the kids running all around, but a space designated as a private customer interview area. And they come in and out, and you've got a sign outside that door that says office here. Anyway, it's indicated that you got a business. And you've doubled your space. Therefore, 20% of your home operating costs could be used as a deduction. Okay? Now, don't go enlarging your, seeing I've got a 10 by 10, or seeing you got a 40 by 40, or half of your apartments used for business. That might get a little bit hard to answer the questions when the auditor is asking you those kind of questions. So just don't go hog wild with that. I found through the years, and easily give this advice. If there's any way that you can have an outside building, call it office, an outside structure, a detached structure from your house, or even an attached structure to your house, but it's walled off with doors and such as that you can say, this is my office and nobody else is messing with it. It's not part of my home, not part of my home life anyway. That indeed gives you a lot of options, because you can look at that space and you as an individual write up a rental agreement between you and your company, and you as the individual can rent that office building or that space to the company for X amount of money per month. Keep it reasonable, but X amount of money per month. And indeed, no questions asked about that. Plus, you can have in that rental agreement that the company covers all expenses related to maintenance, painting, yards, water, sewer, this and that, supplies. And indeed, that might give you a real good area that you could write off some other expenses that otherwise you couldn't. Keep that in mind. That works. But you need a rental agreement with a set amount. Now, I've been renting this office I'm sitting in to my company for 20 years, I guess now. This past year for $625 a month. And now that I've sold my business and need some more income, and I'll be doing more work here, I'm probably going to bump that up to $750 per month. And you got that right. I'll need to do a new rental agreement. But you can set the fee where you want it. Now, the company pays you rent. That's a write-off for the company, 100%. That check that is going into your bank account is taxable income. You're collecting that. So you can see how the two wash out. It's taxable income for you, but a write-off for the company. But it's also a way that you can generate some cash coming back into your pocket, all right? And maybe get some fringe benefits there as well. Travel and meals and entertainment used to be pretty much wide open, easy peasy. Now you have to document everything. Anything that's related, as you're planning on deducting, calling it travel and entertainment expenses, write it down with a date and keep up with it. I'm seeing on TV a lot of software that people are offering to help keep up with your personal expenses, including mileage now. Now, the third most important thing people talk about, that we need to talk about, is the travel cost related to your use of your car or your truck. You own the vehicle. You're paying all the bills on the vehicle. Gas, tires, maintenance, everything. You're paying all the bills. But when you're using that vehicle for business purposes, you keep up with the mileage. And the company reimburses you, the individual, for every mile that you drive that doing work. I think that rate's 65 to 70 cents per mile now. I'm not positive on that. But that would mean that if it's 70 cents per mile and you drive your car 100 miles for business work, the company pays you back $70. And generally, you can pay your expenses with that. You can cover your costs, keep your car up, make a payment, trade it every now and then, and be all right. So I'd say to you, before you do something else, try using the vehicle as you owning it. Your insurance is going to be a little less, and keeping up with everything is going to be a little less. If, however, in your business you're going to need a specialized truck, trailers, other equipment, you're going to need some big ticket items, and it just makes sense for you to buy it as the company. Let that be in the company name for insurance purposes or otherwise. Then indeed, weigh that out. But if you're going to drive that vehicle for personal use, tit for tat here, you don't have to keep up with how many miles you drove and paid the company for the use of that vehicle, just like vice versa we talked about earlier. Now, other items are just kind of plain Jane: interest, rent, taxes, different types of insurances, training cost. And I will mention that clothes and uniform. We got a lot of ladies that aren't going to wear uniforms, but if in your work you need to dress to impress and solid doing that, and as long as you keep it reasonable, men and women, keep up with your clothes purchases that you're using for work. And 2 or 3 times a year, buy a bundle of items so it's easy to keep up with your receipts. And indeed, charge that as deductions. Now, you know, fancy hats and mink coats probably ain't going to play into this, or designer type stuff, but being reasonable, that you could say to an auditor, these are clothes that I use for work, here's my receipt. You can see I bought them at Belts, I didn't online, I didn't splurge. You're probably not going to get any flack at all on that. My business is through the years, owning dealerships. I always had big uniform bills because I had a shop and parts people and even sales people that we rented uniforms every week, and that was a big write-off for us, and it was a nice perk for my employees as well. Choose your tax preps and real carefully, and know in your mind who it is you can go to get inside advice on who's looking after your paperwork. Remember that when you carry work to the accountant, they're going to account for everything they touch. Every little piece of paper, every note, it's going to go down on the ledger, it's going to be noted. The amount of time it took to consider that's going to be noted, and there will be a bill attached to everything you take. So I encourage you not just to pour all your receipts and crap into a big paper sack or box and go set it on their desk and say, here it is. No, let's don't do that, because that's going to cost you more money and time. And you're not going to really have a personal feel for how things are going. But if you separate all that out into different piles alike, all your insurance bills, all your gas bills, all your telephone bills, all your other bills, your parts, otherwise, and you summarize them yourself, take your ad machine, add up all the different things and come up with a total on the different line items. Remember that chart of account, line items, give summaries for each type of expense, and give that sheet to the accountant, not 1,000 pieces of paper. If they need to see something, they'll ask you for it, I'll guarantee you. And you bring it to them. And they got a right to ask for whatever they want to. Because when the tax preparer signs their name on the line, especially a CPA or a really experienced bookkeeping firm, they put their name on the line. And they're well known within the state. The people that sees their returns come in year after year after year, you got a seasoned tax preparer doing your paperwork, I'd say your chances for audit are going down. You got a flim-flam preparing your paperwork, I'd say your chances are going up. Okay, keep that in mind. But now getting information to find out what you need to do related to taxes. There are a lot of ways they collect taxes from you. Sometimes they call them permits or license or estos or fees. But dealing with the city, you're going to talk to the town clerk. And I don't know of any town in North Carolina that does anything except try to help entrepreneurs. So you don't have to be afraid to go to those offices. Usually those clerks are very welcoming, and if they don't know the answers, they know where to find them. Same way with the county. County folks at the tax office generally are very helpful for an entrepreneur. You walk in there the first time, you find someone, look them in the eye and say, I'm a new business owner and I need help. Generally, they'll take you by the hand, sit down, and help you get to whoever it is you need to talk to. The good news is, and in a lot of states, we can't say this, but in North Carolina, the North Carolina Department of Revenue, NCDOR, is the same way. They are set up and geared to help entrepreneurs. They have staff that are there to do it. They have staff in Raleigh, and they have staff in the regional offices. I think about 8 offices around the state where you can go sit down and talk to them. They have staff that go out to the small business centers and give webinars or counseling. So if you want to get in touch with and hear what they have to say, first of all, you can go to their website and see what's on the calendar, or you can call your local small business center and say, what do you got planned for North Carolina DOR? Anybody coming to talk to us, or anybody special? Give me some advice. North Carolina DOR reaches out to help entrepreneurs. I can say the same thing about the North Carolina Secretary of State's office. They are very helpful, and we'll look forward to helping you as a new business person. Now, the IRS, the U.S. Treasury, the federal money people, I'm sure they're nice people individually, but they are tough to find and to talk to and to understand what they're saying from time to time, especially when we're nervous or anxious about questions we have to ask or what's going to happen to you. They're generally not in our hometown and generally not easy to get up with and really don't know how to speak their language. So this is where I would experience through the years would say to you, I think you're going to be really better off to let your accountant or your experienced bookkeeper talk to the IRS on your behalf. Let them ask them the questions. They don't have to mention your name or your business or your address or your numbers or anything. They're experienced in doing this. They know how to ask the questions, and more importantly, they understand the answers in such a way that they can explain them to you and I. So I personally believe in that, and I suggest that to you. In your handout, in your study guides, there's information in writing about how to get in touch with the NCDOR, where their offices are and different things. Now, when we'll talk about a subject now that through the years, folks like you and I who occasionally go to pop-up events or street fairs or community festivals or just getting started and need to know the answers, some questions that always come up. And in the pages here, when I say yes, page so-and-so, and no, another page such as that, the pages I'm referring to are on the website of the North Carolina Department of Revenue. But so here we go. Well, y'all have asked me, and I asked my bookkeeper to find out the answers for us. Excuse me. Good old water tonight, okay? You're going to a craft fair, you're selling stuff, and are you required to collect and add up and collect money from the North Carolina Department of Revenue? Are you required to collect taxes? Yes. Yes. One exception might be the organizer of the event may be saying to you, you give the buyer a receipt to bring to me, and I'll complete the sale, collect the taxes, and give you what's left. But if you're collecting the taxes and if you're making the sale, you should be collecting the taxes. Okay? The rate that you're collecting tax and how much tax do you charge may vary and will vary from county to county, from city to city. So do you collect the amount of tax that you pay in your office since you're the business person? Or when you're out there in the world, do you collect the amount of tax that indeed is where you set up at? The answer is it's where you're located. That's the amount of tax you should be collecting. So to sponsor the event that you're at, you need to ask them, what is the tax rate? Are you required to collect tax on items that you're selling and shipping out of state? Nope. Now, this is a big, complicated subject. A lot of people got a lot of different answers. That's why my slide up here says unofficial answers, because I'm just trying to tell you what I've heard, so to speak. But for this, I'm pretty sure. If you're shipping it out of state, you probably don't have to pay tax on it or collect tax on it. There are some exceptions to that. If you're shipping a lot of stuff, you got a right big business, and you're shipping over $100,000 worth of product into a certain state per year. When you cross over that $100,000 value in items sold, then these states are saying, yes, you need to register with us, collect taxes for us, and send it to us. And that gets real complicated. So keep that in mind, and if your business is growing and strong and you're going over that $100,000 mark, you need to talk to your CPA, and then they will have to weigh it out what you need to do. Some CPAs will tell you, you just got a small potatoes business and you're not going over it too much. I can't tell you officially that you should be doing this, but I can tell you unofficially, if it were me, I wouldn't do it. So you can get a lot of messages on this subject, but this is what unofficially I want you to know. If you're selling over $100,000 a year to a particular state, you probably need to check into it and weigh your options. Where can you get some more information? Unofficial answers are at the North Carolina Department of Revenue website. They've got a place there with frequently asked questions, and you can read and read and read all that you want to read. Let's say that you are out and about and you're going to show after show, and sometimes you set up and you don't sell but $75 worth of stuff and don't collect but a few dollars worth of taxes. Do you have to keep up with that? Yeah. If you collect tax, remember what I said on square one, if you're collecting tax, you need to pigeonhole it. And when you do send in a monthly, quarterly, or monthly payment or report, you need to list it down and pay that 50 cents if that's all it was. Keep up with it, pay it. It's not your money. You need to charge the tax. You might say, well, you know what? I just won't charge any tax and I don't have to worry about sending it in. No, that's not an option. Because if it's taxable and you're selling it, you're supposed to collect the tax on it. Again, they have a whole good, very good section, fairly easy to read and understand at their website for frequently asked questions. Just go there and check into it, and you'll get all the information that you possibly can digest. Now let's say that you're a craftsman, you're building projects, you're making stuff, you're sewing materials and such as that. So the question is, if you're going out and buying raw materials and putting together a product, when you sell that product, do you have to charge sales tax on it? Well, there's two answers to the question. If while you were buying all those items that you were making this product with and you were paying sales tax on the raw materials, if you were paying the sales tax on the materials as you bought them, when you resell that item, there's a good chance that you won't have to charge sales tax for it because the taxes were paid on the materials. Some people say, well, you don't have to charge sales tax on the increased value. I don't know about that. But I do know that if you get a exemption, what they call a manufacturer's exemption from paying sales tax, when you go buy those raw materials and you tell that vendor, I've got an exemption on this, then indeed they won't charge you the sales tax. They give it to you without it. They don't want to see a copy of that account number you have with the exemption. And then you can go home, put it together, and when you resell it, then you would charge sales tax on the finished product. See the difference? Now, if you're big time into making stuff or big time into reselling things, then you're going to want to get a resale exemption from the North Carolina DOR. Because if you're paying taxes on it and you're having to double up and charge those taxes again, it may put you out of business. You may get your prices up so high you can't sell anything. So look into that. Every type of business, I have a little bit of different waiver on this. So talk to an experienced person about it, or the North Carolina Department of Revenue, they're experienced with it. Get it straight. Start out doing it right. And it's not a big deal once you get started. Taxes, 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 lots of different types. Don't get scared. Don't get confused as you move through your entrepreneurial life. You'll just learn to roll with the punches on it, because you're going to have withholding taxes related to employees, privilege license, which is basically saying I'm going to pay a tax to a local community and they will give me the opportunity and the authority to do business here, but I have to register. Why do you have to register? Because they need to know who and where you are, what kind of chemicals you got in your building. Make sure you're looking after the fire codes. Make sure you're staying within the zoning codes and the street signs and everything else. So you need to register for that privilege license so you'll have access to all the information that government needs to give you, so y'all will help each other instead of hurt each other. Unemployment insurance has to be paid. If you have an employee and you're paying them a payroll, there's all kinds of extra payments, and one of the things is unemployment insurance. And so in other words, you have to pay to the state an extra tax so that if that employee becomes unemployed, they'll have some money to give them unemployment payments. Make a lot of sense? Not really, but I'm going to tell you that just because you're making those unemployment insurance payments and they are kept in a certain account in your name, they keep up with how much money you've paid in. And if your money runs out, they're going to charge you more, a greater percentage. But I'll tell you that if you go out of business or sell your business, and no matter how much money you got in that unemployment insurance account, you're not going to get it back. No, I made that mistake thinking I was going to get me enough money back to buy a boat when I sold my company the first time. Didn't work. They told me, Mr. Carver, we appreciate your contributions through the years, and you got a nice, tidy little sum here, about $15,000, and I'm sure that you'd love to have that back, but we're not going to send it back to you. No, we're going to keep this money. Yeah, you paid it. It was your money. But we don't keep this money in case one of your many, many happy employees has trouble down the road. We'll be able to dip back into that fund and give them a little help with your money instead of the state money. I said, holy moly, I don't like this law, but that's the way it is, and I never saw a penny of it. Hey, guess what? You get to pay a franchise tax. Yeah, you got a Chick-fil-A or a Arby's or some type of franchise? Nah. They call it a franchise tax, but what it really is on your state and your federal returns, one of the last pages, it's got a place there, franchise tax. And depending on how big your business is or the type of filing you're doing, it may be $50, it may be $200. Very seldom is it over $200. What that is a charge that the government charges you to give you the privilege to file a tax return. No matter whether you made money or lost money, you're going to pay that franchise tax. So the city, the federal and the state governments are going to tax us. They do tax us. And the tax we pay them are based on our profit. And our profit, taxable income, is the number that comes out after we take in all of our income and we subtract all of our expenses and deduct depreciation. That number that's left is what's taxable. So you see now why depreciation was an important thing for us to talk about. That's the federal and the state governments, income tax. The counties, they're interested in not your income, but what you own, your assets. How about that? These capitalized items are what the county is interested in. So you see how we've come full circle now? And everything that generally you have to list on your business report will come off the depreciation sheet of your business financial statement. And they're linked together. So everything we put on that depreciation sheet will be accountable for over on the tax report. Our vehicles, inventory that we've got on hand, not for sale, but just items that we have, work in progress items maybe. Tools, real estate, equipment, and so forth. Phone systems, speaker systems, lighting systems, fences, security items, things like that. All those items will be listed on your depreciation sheet if you didn't write them off as a general business expense. All those items on your business sheet will be showing as a part of your book value, net worth of the company. That's where the county taxes come in. All right? Therefore, if your business is up and running several years and you're starting to build a pretty good sized depreciation sheet, you're probably going to have to wait until your bookkeeper or accountant gives you your year-end financial statement before you can fill out the county filing form. The county will mail to you as a business person in December, usually the 1st of December, a form that says Business Tax Filing Form. And they sent that to you because you got one of those privilege licenses. They knew who you were and where you were. You're supposed to file that form back by January 1st, give that back for them. But here's the catch. If you're having to wait for your accountant or bookkeeper to give you that depreciation sheet, you don't have the information to fill it out. So therefore, as soon as you get that statement from the county, you go to their website, and every county's got a website now. Go to the tax department. They have a place that you can send a message or do a click mark and request an extension for filing your county tax form until April 15th or May 15th, depending on what your bookkeeper's doing with your taxes. Okay? If you do that, you're just fine. If you don't ask for the extension, when you do finally file your information for your taxes, they're going to charge you a 10% penalty. That's state law. There's no ands, ifs, or buts about it. So to avoid that possible penalty, get your extension. The rest of the story is, if you're just buying a few things now and you don't have a whole lot to list, you keep up with what your depreciable items are, and you can fill out that tax statement without a depreciation sheet. If you're just getting started, usually that's very simple to do. So good luck with that. Sometimes your bookkeeper, whoever's doing your books, can fill those forms out quite easily for you as well for a fairly small charge. But they have to be filled out, and you have to keep up with them. After you're in business a while, and you've probably bought up all the assets that you're going to buy for a few years, you can take this year's statement, copy it off word for word over into the new statement, and file it yourself. Because usually there's very little, if any, changes in depreciation. Just keep right on going, depending on the schedules that we've had that we talked about. So county taxes are good. Remember, anything that you're keeping on that depreciation sheet, you're taking a tax advantage of it. And when the county auditor comes around, if they do, they've got the right to ask you, show me these items. So as you're looking at your depreciation sheet, in the back of your mind, you need to be saying to you, do I know where this is? Do I know where that computer is? How about this toolbox? Do I know where it is? How about this trailer? Anything that's listed there, you need to have in your mind that it's physically where you can go put a finger on it. And if it's not, then there's a place there that you can show it's been disposed of and take it off your books. Can't depreciate it anymore after you take it off the books, and it won't be part of your net worth. But if you can't put your finger on it, it shouldn't be on your depreciation sheet. Okay? Radar systems. I'm encourage you all through this series to keep your radar on and alert, right? Well, there's one radar system we don't want to show up on, and that's the old auditors. We don't want to be on their systems. The good news is only 1% of tax returns are audited, but sometimes it's random and will just come up for no reason at all. But other times you can come up because when you sit here and you held a red flag and you said, please come and audit me. So I want to give you some heads up on how not to be holding up that red flag. Number one, if you're doing business with reputable preparers that have been around, got a good reputation, got their identity number with the U.S. government, IRS, they give out certifications for qualified preparers. So you might want to ask people about that. But before you go running up to a mobile home that's got a sign in front of it, or a big fancy office building that's got a sign in front of it, or a van beside the road with a sign in front of it, before you go running up to them saying, I want you to do my taxes because your sign says you're going to get me a great big return. You guaranteeing me a $3,000 return on this sign. Well, my friends, when you see that type of advertising, you know that you're dealing with a weak player, someone that maybe has mischief on their mind, and stay away. Nobody can guarantee you a tax return in advance unless they're planning on cooking your books and asking for something that you don't deserve. And indeed, when you send in that tax return, or at least in times before now when there were plenty of people at IRS working the returns, they'd send you a check on back. But when they sent you a check on back, it may have been red flag. This looks fishy to me. And when they come around checking a few months later or a few years later, that person who was the crooked tax preparer, they're gone. They got a piece of that big return you got probably, and they hightailed it on out of here. Now you're sitting there to face the music, and you may find yourself owing a lot of taxes. Think about these people that come on the TV about 2 o'clock in the morning, the ladies and the men saying, oh, I was in such big trouble with the tax people. I owed them $35,000, and I got this outfit to help me get it down to $2,000. Every time I see those, I'm thinking about somebody who went to a shady tax preparer, or they gave somebody some shady information and it caught up with them. Yeah, I've got empathy for them. I care about them. Maybe that wasn't the case. But indeed, I've got a gut feeling that's exactly what happened. So you want to stay with someone that's trustworthy, that has earned their trust, is certified as a good tax preparation outfit. Do business with them, and you'll probably have a lot less troubles. If you're planning on keeping all your money under the table so you don't have to pay any taxes, then you plan on having trouble one day, because eventually it's going to catch up with you. It may be sooner or later, but it'll come. The tax folks are really smart on this. See what your vocation is. They'll see how much money you're spending on this or that. They'll see your bank accounts. They got you say I deal all in cash. That sounds good, but they're pros. Eventually, they'll seek you out. Report your income, pay the taxes you owe, and move on. If you're making taxes, that means you can borrow money. You're making profits. So yes, avoid what you don't have to pay, but indeed report your income and be fair about it. Now, there's some incomes you don't have to report. You can look into the gifts from certain people up to, I think it's $11,000 to $20,000. You can accept gifts from folks. Maybe you have some kinfolk, some loved ones that have left you some money or giving you some gifts. Everything you don't have to report, but indeed the things that are coming from your viable income, your employment, you give it a fair shake. Make sure that you're not getting yourself in trouble. Not filing on time, as I just said, for small business people getting those extensions with the county, that's one thing, but that's the county. Not filing on time with the feds or the state, and usually that means at the same time if a tax preparer is doing both of you filing, and you do it year after year after year, and there's no good reason for it, then that's going to be questioned at some point in time. Wonder why. And what I want to say to you now, a lot of people don't know, is April 15th around the corner. You get your books back. It looks like you're going to owe $10,000 in taxes, and you've got $2,000 in taxes. Well, it's time to tighten up somewhere, right? Remember that old thing about pigeonholing? Paying estimates? That's coming home. But if you're coming up short, and you said, well, I can't pay it now, I think I'll just get an extension on over to October. Maybe things will be better off then. Well, here's what you need to know. It's okay to file that extension. And come October, then you're going to owe that $5,000 plus interest on that $5,000 till October. It's not a free ride. But if you don't file for the extension and you finally do your taxes in October and send a check into it for $5,000, then they're going to come back to you and say, you owe us not only interest from April 15th till the date you file, but you also owe us one heck of a penalty for not getting an extension. So getting extensions is not a free ride. Not getting an extension and paying late is definitely not a free ride. So oftentimes, if you see tax season is coming and you're seeing that you're coming up short, then maybe you want to dip into some savings. Maybe you need to borrow some money at a very good interest rate, because it is better to pay those taxes when they're due. But if you can't get any money to use until then definitely file for an extension and make it legal that you're paying late. But remember, you still don't have to pay that interest. Okay? So that wraps that up. So now let's kind of look at our whole season here that we talked about. And I want to share with you and summarize and go over things that please try to remember. Your business priorities start tomorrow. They start every day. Remember how we discourage saying to our customers, take it or leave it, putting a price tag up there that sends that message, take it or leave it. Your customers will leave it and go shopping. And when they leave it and go shopping, you're saying to them, okay, go talk to my competitors. Instead of saying take it or leave it, what I do want you to say is, hey, here's a great price. It's on sale. A lot of benefits here for you. Let's talk about it. We got options. We've got options. You can pay different ways, different times. You can take care of the freight. You can do the assembly. You can do whatever it is. Give the opportunity to the customer to talk to you about it instead of looking at the price and walking out the door. The RFC is our raving fan customer. They are critical to keeping you in business. And we need to remember that and follow up with them all the time, put them in our database, be sending them information. The most important marketing tool you have is the mobile page, that page that shows up on your cell phone when someone is searching for you. 80 to 95% of people shopping today are doing it on their phone. If their first meeting with you is with that mobile page on their phone, make sure it's a powerful page. You've done what it takes to get them to call you, to give you business, not sit there and squirm around and mess around with a page that's not set up for mobile shopping. If you're in business and you don't have a My Business at Google account, then you're missing a free website. Get it. It is so important. It just gives you a new era of opportunity to do business. The second most important web page that you'll have is the landing page. The landing page is a web page at your website or media site that is designed to make you money. Many of you are looking forward to having websites and web pages here and there, and I am for you. We need lots of web pages to give customers lots of information, but we must have landing pages. That's a page designed to make money for you. If you don't have them, you're not going to make money. If you do have them, you've got a chance. So let's do that. Know that people shopping on the internet today, as it's been for 35 or 40 years, have a built-in amount of anxiety. They're afraid of scammers and cheaters and liars and crooks on the internet. They have a right to be. You want them to be. But you, as an entrepreneur, need to know that your testimonials from other customers and friends that have done business for you, when you put those up there for your new potential customers to see, it really lowers down the anxiety, big time. And when you couple that with introduction videos on your web pages, it even really pushes it down to get rid of those anxieties. Add the videos. Remember in week 3, we talked about the magic marketing moment. That's where you've got a structured marketing campaign that is designed for you to do deals and have customers come in. But the plan don't work if you don't get that database information from them and follow up after the sale or after the encounter. And when you're following up, you're creating a relationship, and you're able to say to that customer, what's next? When do you plan to buy something? What do I need to do to my business? We quiz them and get all the information we can out of that satisfied customer and plug that right into the Golden Goose plan so that our business will benefit from that. It will keep you in business. A structured marketing plan that you're working will keep you in business. We're not going to talk this afternoon about Sales 101 or 202 for the sophomores or 303. We're going to go right straight to Sales 404. And I'm going to share with you observations and opinions and strategies and tactics that I know will help you lose fewer deals and close more deals. So pay attention. If you hadn't had experience retail selling, then I'm going to try to give you some information that maybe you hadn't heard before. Across the board, number one, it is always be closing. Your long-term survival as a business owner gives you the need to have a persona that whatever else is going on in your life, the entrepreneur is always saying to himself, where's that next deal I can close? You've got a cat or a dog that's always sniffing around or looking or got their radar on. What's the next best thing coming along? Me and you need to have that. That's a trait we need to own. Always be closing. And we also need to have in the back of our mind, I am not going to do business with someone that doesn't trust me. So my behavior, my looks, my demeanor, my presentations need to be aimed at generating trust 100% of the time. Levity is good. Telling stories is good. Having opinions on this and that's good. But if it's not creating trust, then we need to leave it out of our game plan. Now, some do's and don'ts, little things that make a world of difference. When you're talking with a customer and you have a text message or a phone call that comes in, is it okay for you to say, excuse me just a minute, I want to take this? Just everybody does it. I mean, your customer just did it. But no, do not do that. When you're moving into a conversation with a customer that you're trying to build a relationship with, your goal is to make them feel important. Leave your phone in the truck. Leave your phone in the car and go talk to them, because I don't want you having a phone call as an excuse that's going to break your conversation with a customer that you're trying to gain confidence and trust with. When you answer that phone and you break away from that conversation, you're saying, you're not as important to me as this phone call coming in, which may be a spam call or a do-nothing call. Or it may be an order for something. But there almost is not, there's always an opportunity to return a phone call. There's not always an opportunity to create a better degree of trust with your customer. Now, they're going to do it to you because that's the world today. But you're something special. You're going to be in a league of your own and take these little comments right to heart. I'm telling you from personal experience, it makes a difference. Do not take those calls. Do not break the conversation. Maybe you think your cologne smells good, and it's going to get you a good-looking man or a good-looking woman, whichever. And maybe you think the odor smells so good to you, I'm going to pile it on without any consideration of how is it extending out. Let me tell you that in this world today, many people are just allergic to and get sick and hate, can't breathe around certain odors. Sometimes even good ones if they're strong. Back off. We don't need quite so much shaving lotion or perfume. Back off. And my friends, please forgive me if I'm stepping on your toe, but I'm trying to fill up your pocketbook here. If you smoke, you smell. I smoked for 20 years. I know that, and I know it well now. I have family members that I tell this to. But when you smoke, you smell. You carry that odor with you on your car, on your clothes, and otherwise. And you can't smell it. I know that. But let me tell you, most people that don't smoke now, they can tell it. And some people will not keep being in the environment with someone who has that odor about them because it makes them uncomfortable, nauseous. Try to quit smoking. And if you can't quit smoking, at least make sure you're not bringing your smoke odor into a meeting with a client. Maybe you think it's okay. Maybe they're smoking. You think it'll be okay. But let me tell you, that second person in the room, that other decision maker, they may be one of these that hate it. Of course, tobacco spit, bringing your dogs around or dog odors around and such that, that's a no-no. Yeah, you may have that privilege or honor, but don't take advantage of that because in the long term, it may cost you some really big income. And in today's world, maybe like never before, I don't care what your political view is, I don't guarantee you this, 50% of the people you talk to, or 90 or 49% of the people you talk to will disagree with you. You may think you're 100% right, like I do with my views, but I know that 51% or 49% of everyone I talk to may think I'm just as wrong as I can be, and they don't want anything to do with someone that thinks like I do. So leave it out of the game. Leave your politics out of the game. Leave your favorite ball team out of the game. Maybe even your religion out of the game. There's a time to put it in and not do it in. And I love to give testimonies, and generally I'll try to sneak that in one way or the other as long as I make it good for both sides. But political politics in today's world, no. Leave it out of your business any way that you can. Because the person you're talking to may totally agree with you, but the person over on the side of the room that's listening in, he may be a sleeper over there, and he's going to shoot you down the minute he has a chance to have input related to this conversation. Be smart. Let your mouth be closed sometimes when it comes to those subjects. Is it okay for you to walk into an office when someone else is on the phone talking, or close by to someone that's on the phone where you're hearing their side of the conversation? No. That's less than being professional, and it's less than what you want to be, and it will pay you dividends if you do not. Even though they may be saying, come on in, it's okay. You say, no, I'll wait a minute. And you stay out of earshot. You're showing professionalism here that is rare these days. And people will respect you for it and remember you for it. And it's the little things that turn heads. You've just given a quote to someone. You've given a proposal. You feel really good about it. I mean, they're a good customer, a good friend. They've done business with you before, and it's in the bag. Man, it's called counting your chickens before they hatch. Yeah. It's never in the bag. You as a professional want to have a follow-up plan with every quote that's out there that's important to you. I say every quote period because they're all important to me. Have a follow-up plan that you're going to touch base with that customer, whether you send them an email quote, a telephone quote, stood face-to-face with them, visited with them. Follow up. Follow up in a quick but reasonable length of time. Not to act like you're panicking, not to act like you're scared, but listen, do act like you're hungry. Let them think that you need the business because maybe it's because you're getting ready to go out of business. I wouldn't say that, but because you got some important business goals you're trying to reach, and help me do this. Go ahead and give me that order. Be positive about it, but let them know they are important to you, and their order is important to you, and you're not going to sleep on it. Tomorrow is Friday. You gave a quote to someone yesterday. Let me tell you, Kendall, Thank you for accepting my quote. Everything look okay to you? And you know what? Friday is a good day to write this order, and I'm ready if you are. Let me tell you, I put my trading breeches on this morning. The lady might say, "Look here, I got my special hairdo on this morning just for you," or whatever you say that makes you feel good, that you think will make the customer feel good, and to go ahead and move them forward. Assertiveness. This is the time for you to be assertive. To remember that people need to be motivated. You got to be smart enough not to be pushy, not to be a butthole, not to get out of line, but be smart enough to let them know you're hungry and you care and you really would appreciate this order today. What's the other side of it? Lay off, don't say anything. Well, there's other competitors out here that's don't go after that order. And if they can smell someone's available and thinking about it, like I can, I'll close the deal on. I'll take that order away from you and put that money in my bank account. Yeah. And I'm giving you the mutual helpfulness right now to tell you that goes on. And I want you to do it. Because you got a business to run and to keep and to last for a long, long time. Like we say, we want you in business for the long haul. There's an urgency in today's world. People want to know that I've given you the opportunity to do business. Now you get back to me, whether it's returning a phone call, answering an email, or whatever. So I'm going to apologize for you right now because we're going to go over just a few minutes. I hope you can stay with me because this is an important part. We're going to talk about closing sales, the important things that you might want to remember. First, don't give up more information than you have to. Be precise, make your presentation a good and present, but don't give away information you don't have to, like itemizing different items in your quote. People will go shopping on the internet and try to take the business away from you. Remember that every opportunity to sell is important and make a promotion of it. Let that customer know, even though you're quoting them something small or insignificant, that it is still a major concern for you to make sure they get it, they're happy, and they buy it from you. Big tickets or little tickets, let me tell you, it don't take but 20 nickels to make a dollar. And lots of times it's the small deals that keep you in the game. Don't tell people who your vendors and your subcontractors are. They'll go to them. Now, mainly remember that some people have a very hard time saying yes. They'll give you the order, they want the order, they've saved up their money, but they just can't say yes. We all, individuals, get to a point that we really rather keep our money in the bank than buy this thing, especially in uncertain times, kind of like we're in right now. So it's my job to tell you there are ways to help motivate people. And that motivation can come to you in several ways. Number one, be prepared when you go in the room. Your paperwork needs to be a work of art, ready to sign, ready to initial, not pen scratch, but looking good. We need to remember that Dr. Mesmer, back in the 17 and 1800s, determined that there was such a thing called mesmerizing. And this is the thing to remember. We'll close deals when we learn how to get our customers to get rid of those anxieties that we talked about and focus on what we're saying. And it's like the mesmerized, being bedazzled or bewitched. And I always remember my grandson Colin, when he was a baby, sitting in front of the TV when SpongeBob SquarePants was on. And nothing else in the whole world would faze him. His eyes were fixed on SpongeBob. He was mesmerized by that program. And we as salespeople, closing deals, need to take that message from Dr. Mesmer and from Colin. And remember that when you're closing a deal, and in that preparation, it's like you're being on stage. It is a drama going on there. No different than a preacher getting his hand signals just right, raising his voice and lowering his voice at the right time, having the right music being played to help him get to that deal closing. Because what we're looking for is the aha moment. Aha moment, like when you're rocking your grandchild or your baby that's been crying for hours and just won't stop, and you're so tired. But at some point in time, you look down into the baby's eyes, that three-pointed smile on his lips, and he smiles and looks up at you and goes, and the crying stops. And we know that they have given up on those anxieties, then they're going to sleep and you can get some rest as well. As salespeople, we are always looking for that aha moment. Once a customer gives us buying signals, it's time to stop selling and start closing. We have to convince them that they like us, that they trust us, they know that they need to buy it from us, that they feel you got good value, you've done your homework and told them about warranty and such as that. And now it's time for them to let go of those anxieties and breathe easy. And you do that by talking to them, by getting their attention. Like we talked about last week, take the magic moment to own the moment. Lower your voice down. Look them in the eye. Keep shaking your head like this. Keep doing your hands like this with your gestures. And you'll see at some point in time, their head will start nodding too. They're agreeing with you. And that is the aha moment. That is the moment that you move in and you say, okay, you remember that paperwork? Here's your number. Let me draw a circle around and put my name and hand them the pen. All you got to do is put your initials there. Or you've been shaking hands like this. This time you move in and extend your hand to them. And if their head was shaking like this when you were talking to them, their hand's going to reach right up and you close the deal. And they don't have to say yes. They never have to say yes. Because some customers will not do it. And sometimes salesmen will waste a lot of time doing all they can to get them to say yes, when all you needed was a nod or a handshake or an initial. And you can close the deals. I've done it with big deals, huge deals, and little deals. When they are ready to let go of those anxieties, you need to be ready to close the deal and get them to buy. It's you, the professional, that's going to make that happen. Congratulations. You've finished 7 classes with me. I've enjoyed every bit of it. You are my pride and joy. I get such great gratification from seeing y'all send in those homework assignments. The videos I still want to see coming. The mission, vision, and promise statements, keep sending them in. I want to know that you're in the game, that you're in the race, that you're in it to win it. And being in it to win it in entrepreneurship is staying in it. And keep working and keep learning new things. My invitation is up to you to attend my classes all the time, every time. I'll have something new in every lesson, and just look forward to working with you. The longer you're in the academy, maybe you can get up to be a Master's 12 like Sarita. We'll always have you, and you'll start creating some good friends amongst your other friends here. So let me say to you, first of all, Jesus Christ is my Lord and Savior. He sees me through some tough times through the years. I believe in him. I'm a sinner, and I ask for forgiveness. Whoever you find your confidence is, whoever your faith is with, go to them to charge your batteries. As entrepreneurs, we need to charge our batteries and rebuild us up. Go to church on Sunday, be with your family, find the strength that you need to get up on Monday, set your priorities, and let's go sell stuff. Let's make our businesses go forward. God bless all of you. Thank you, and I appreciate your comments and look forward to seeing you next time. Thank you so much. Turn your mics on and let's talk a while. Nashir, glad to see you with us tonight. I think you're a newcomer. Glad to have you with us. Cherry as well. Any comments from anyone?
The class is always good as usual. I'm so excited. I know I haven't sent you anything yet, but I'm working on it.
I'm looking forward to it. Thank you so much. Good to hear from you, Tisha. All right. That's the kind of message I like. Anyone else?
No, I would second that too, Steve. Thank you so much for all that you've done and give of yourself. It really makes a difference to others. I really appreciate it, and I will be talking to you soon.
I can't wait to hear from you, Steph. Looking forward to meeting you. We're close enough. Maybe we can get together and talk business sometime. Thank you.
Absolutely. Thanks.
All right.
I just want to thank you for all the great content you taught. I definitely will be in the next series of classes. But thanks for everything.
Kendall, you are the man. Thank you for joining us. I've been enjoying getting to know you, no doubt about it. Okay, anyone else? This is like the Waltons on TV where everybody says, good night, John Boy. All right.
Thank you. Thank you so much, Steve. Jayshree here. Thank you so much for this continuous series of sessions you did.
You too. Thank you. I'm looking forward to meeting you. We're close enough that maybe we can have lunch one day and you can tell me all about your experiences and world travels. I can't wait to hear about it.
Yes, sure, sure. If you come to Raleigh, Cary, I would love to meet you.
We can work that out. Maybe we can get together up there and get Stephanie to join us, have us a little class or something. All right, and Dr. Jacobs, I'm so proud of you and the work that you've done through the years and helping people. God bless you and all the people you serve.
Thank you. Happy Resurrection Season to you.
Thank you very much. All right, everybody, I'm going to turn it off. Good night and take care of yourselves. I'll be staying online here. If you have any comments or you want to write something in chat that I can follow up on, I'll be working on that, and you can still do that. Good night and take care.
Okay, good night.
Good night, Steve.
Good night, Sarita. Thank you.
I will stay in touch. Thank you.
Thank you, Carolyn. Good night, John Boy.